Good day to all of you. Today our lesson is about the order block. That is, today we will teach you how to find and identify order blocks. In general, what is an order block? When our trend reaches that area, what do? We open a position. In other words, a block is the place where we open our position. Now, if you look at this chart, we will identify order blocks on the USD-JPY pair using the daily time frame. For example, as we mentioned in previous lessons about structure break, meaning we look in the direction where the trend changes, we have already covered trends in detail in earlier lessons. That is, if each lower point is not updated, then what did we say happens? We said that our trend will continue upwards, right? But when our lower point is crossed from the previous direction, what happens to our trend? It will shift downward. Now, if you look here, our trend has already shifted downward. After it has shifted downward, we look at the upward candles. For example, if we look at an upward candle, actually, in every moving candle, what do we have from all the candles? There is a stop loss, meaning people might open a position here, expecting the trend to shift downward. After opening a position, when we short, where do we place the stop loss? We set it above, right? So these are our stop losses placed above, right? Now, in Forex, the major wholesalers specifically create another high at the same direction's peak in order to take out the stops placed by these people. At that moment, if you look here, people usually place their stop losses around this area. So what do these market makers do when the stop loss is there? They go and take out those stop losses. In other words, the direction where these stop losses are taken out is what we call the order block. For example, if you look here, the previous direction has a long wick. So what does this green candle here become? It is considered an order block. For example, I go and mark this as an order block. First, it has taken out the stop losses from the previous candle. So what did I do because of that? I considered it an order block. If you look here, if the stop loss is higher than the previous candle, it means that stop losses have been taken out here. In other words, liquidity has been collected. Liquidity means collecting people's stop losses. So in this case, we have an order block here. But if you look, we don't immediately mark this order block, right? First of all, this order block is taking out the stops behind it. Secondly, what's happening here is a structure break, meaning when the trend direction changes, what happens? An order block appears, right? If you look here, let's assume that this candle took out the stop loss of the previous candle. But in the previous direction, a break hasn't happened. Since a break hasn't occurred, what did that trend do? It continued to rise upward. Now, if you look here, first, it took out the stop losses of the previous candles. Secondly, what happened here? There was a structure break. After the structure break, we can confidently mark this as an order block, right? So if this is an order block in the upward direction, that means our future direction. Yes, if the price comes to this area, then what can we do? We can consider a position to the downside, right? Now, this is an order block in the upward direction, meaning a position expecting a drop. Now, let me show you an order block in the downward direction. First of all, what is our trend doing? Let's say it's moving downward, right? It's moving downward. After it starts moving downward, if each peak hasn't been updated yet, there's this peak and there's that one. None of these have been updated yet. Let's take this peak, okay? What happened to this peak in the future? There was a structure break, meaning since it broke the previous direction, we can consider the candle below as an order block. So if you look, this candle is taking out the stop losses behind the previous candle, first of all. Secondly, there is a structure break in the pullback here. So the first confirmation is that it needs to take out the stop loss behind it. The second confirmation is that in this pullback, what needs to be done with the previous peak, the higher peak? It needs to be broken upwards. When it breaks, what do we do with the lower candle? We mark it as an order block. So when the trend shifts from down to up, this is the order block for when the trend shifts downward. Now, in the future, if the price comes to this order block and on the 15-minute chart the trend breaks in the same way, what will we do? We will keep opening positions, right? In general, the meaning of an order block is, first of all, we wait for it to take the stop loss, that is the liquidity. After that, we wait to see what happens here, specifically for it to make a structure break. Once the structure break has occurred, we can then mark the bullish candle as the order block, right? When our price reaches the order block, we can already open a position upwards from here. And from this upper direction, what can we do downwards? We can open a position, right? So in general, I just showed you this on the previous chart. Now let me look at the chart over here. Okay, let me show you. Now, if you look at the chart over here as well, you can see that this can be considered the lower point, right? We've taken this as the lower point. Now, as for this, we have what's called liquidity here, right? It's been taken out, right? So after collecting all the stop losses here, this area becomes an order block for us. But first, we need to confirm that liquidity has been taken. After that, we look to see what happened at the top, whether a break of structure occurred. If a break of structure happens, what do we do then? We mark the order block, right? For example, let's say this is my order block. Let's consider this as my order block. I've marked the order block. After marking the order block, what did the price do when it came to this area? It moved upwards, right? So you identify such blocks on the higher time frames, and then on the 15-minute or 30-minute chart, if there is an imbalance and a 50% or 100% fill, what do we do then? We open a long position, right? Now, on the daily time frame, what am I showing you? I'm showing you order blocks, right? In general, there are two main reasons, two rules for order blocks. The first is that it must take liquidity, right? And after that, what should it do? It needs to break the structure in the upward direction, right? Here, if you look, this break of structure is happening right here. So when we reach this point, we can open a position upwards, right? But if an order block is formed from the upper direction, what do we do then? We can open a position downwards, right? Now I'm showing you how to draw it manually. Now we have another indicator. If you don't turn on that indicator, it will be easier for you to identify the break of structure, right? That is, it will be easier to identify the order block. Now let's look here as well. EUR, USD on the daily time frame. Now, let me show you that there is also an order block here, okay? For example, here at the very, very highest point, I can look at this one, right? Now, this high point has taken out the previous highs for liquidity, right? Liquidity here means it has taken out those stop losses we mentioned earlier. So this is considered an order block for us. But for this to be considered an order block, we need to see if there was a break of structure from below, from this area, right? If there is a break of structure, yes, if you look here, there was a break of structure. So what does that mean for us? It is considered an order block. So I go to this one and count it as an order block. If in the future the price comes to this area, yes, if it comes to this area in 15 minutes, in which direction is my imbalance pointing? So whether it's a 50% or a full 100% fill, what do? I open my position downward, right? So I looked at the order block from the upper side here. Now let me look from the lower side, okay? In the downward direction, I consider this my lowest point. I've identified my lowest point. Now here, first I check this liquidity to see which side this liquidity is intended for. For example, what did this liquidity take from the candles over here? The liquidity is intended for people who set stop losses here, expecting the price to go up. So what did this new candle do to all these stop losses? Oh, what did the candle do? It took the liquidity. So what do I do with this? I mark it as an order block. I mark it, right? First, I mark it as having taken liquidity. Now, secondly, I check if there was a structure break here. A structure break means a change in the trend direction, so I look for that. If you look here, what's happening as well? There's a break. A break means if this pullback is broken, it's already considered a structure break. I've marked my order block. If the price comes to the order block and makes a move, yes, I've marked my order block. And if the price makes a move, what do I do from here? I keep opening positions upwards, right? So if you practice using the order block like this, it becomes very easy to understand, right? Now let's look at the upward direction here. Yes, this was my order block in the downward direction. There's already been one touch here, right? A touch means a test. The price came and rose upwards from here. Now let me look from the upward direction, my upward direction. Yes, let's consider this my high point. Now, there's still no break here, right? If there's one among these, we can't count it, right? There's no break here. A break means that if the price comes here and makes a break, then this can become an order block for us. But if it doesn't make a break, what does this not become for us? It's not considered an order block, right? That's why we have two ways to identify an order block. First, we need to take liquidity, and second, we need to make a break, right? I looked at the third bar, for example. Let's also consider this side as the highest point. I look at my highest point, and then first I check which of the previous candles were meant for liquidity. That is, in this case, the nearby candles behind it, the ones closest to it, have taken their stop losses, I'd say, right? After these stop losses have been taken, what do I do to check whether this is an order block or not? I wait for a structure break here, right? Only if there is a structure break, what happens to my upward candle? It becomes, this one is the highest, right? Yeah, then it is already considered an order block, right? For example, here I mark this as an order block. Now look, the price comes to the order block, touches it, and what has it already done? A downward position has been opened, right? So just a single touch can lead to an aggressive price drop, right? I have marked the order block in the upward direction. Now let me show you the order block from the downward direction again. In the downward direction, there was a structure break here. A break, as we said before, look, yes, if it cuts through each previous high, then what happens? There will be a structure break. Here as well, there is a structure break. If there is a structure break, what happens to the candle below it? In the context of technical analysis within financial markets, particularly when observing specific price action on a chart, a particular candlestick formation, or a cluster of candlesticks that indicates a significant imbalance between buying and selling pressure, often at key turning points, is formally recognized and designated as an order block. This identification is crucial because it signifies an area where large institutional orders were placed, leading to a decisive shift in market direction, and therefore it is considered a pivotal point for future price movements. Smart money, yes. Here there is something called Lux Algo for smart money. You go there using the code 35570, put a star on it, and if you click on it, the smart money indicator will be displayed on your screen showing what it does. Now, if you look here, for example, in the downward direction, all of them are order blocks, yes? Here the main order block is shown to you, and in the future we will cover what mitigation blocks are, yes. All of that is being shown to you, added and displayed, yes. Now, if you look here, you can consider the green zones as support zones, that is, zones where the price is expected to rise. Yes, right now you can consider these green zones as growth zones, and the red zones you can already consider them as decline zones, yes. Now, this indicator can also be used on any time frame you want, it's also a very good indicator. Now, if you only use this order block, the main order block, here it will also show you exactly where there was a touch, where there was a structure break. It will show you everything, yes? If you look here as well, this area was empty. And if we are talking about the measured area here, we can take it here. Then here as well, the indicator itself will draw the main downward directions for you, yes? That is, if it's red, and if the price hasn't come to test this red area, in the future you can look for a position there. And if it's a green zone, then you can already take a position upwards, yes. So that's it for today's lesson on order blocks. In the future, we'll show you mitigation blocks and breaker blocks in full detail, yes. See you in the next lesson.